Every Tuesday and Thursday, we are joined by Tim Ord of the Ord Oracle. You can go over to his website, ord-oracle.com. You can check out the newsletters tab, the book tab there. You can contact him as well. Additionally, you go to the services tab of TFNN.com. You can see 2 fantastic webinars from Tim Ord that he did for us over at TFNN. That's the Secret Science of Market Tops and the 6 Secret Ratios Every Trader Should Know. Tim, how are you doing?
Good. You got my charts?
I do. The charts are looking great.
All right. All right. Well, we're going to go through this. This is updated again. See, we're not starting to rally from what I can tell. Even though we're rallying today, I don't think we're going to go far. We really just don't have the panic, which is basically energy for the market to continue higher. The top window is basically the 10-day. That's kind of the key indicator, actually, the 10-day and 21-day. These are all shorter top ones. The 10-day at 106, ideally needed around 120. So, we're just not there. This is a 5-day trend right here. Again, we're below, it's 103. One below that, it's a 2-day trend. That's close, 1.16. Not bad. But it's 2 days. No, it's 2 days of trend reading, not really that great. Then they got the bottom window 3-day trend. All in all, it's not bearish, but it's not really bullish either. So you gotta, and that's what the market's kind of reflecting here. It just, you get some news comes out, pops a little bit. I don't think we're going to go far, and I'll show you why. This is the weekly charts. The monthly charts rule the weekly rule the dailies rule the hour, and all the way down. And today, I made this chart, but we're basically, we touched this high today, which is basically pretty close to 570. That's where this high was. And so once you touch a previous high, you have to actually touch it. You can't go right below it. You have to touch it. And volume's 10% lighter than that previous high. So this week here, you're testing this week right there. You compare the two volume. You can see this volume of March 31st is about double the volume of or April 29th. So you don't have enough energy to get through it. And now we're testing this week. We're testing yesterday's or last week's high. Yeah. And volume has to come in. If it puts this way, if it comes in 280 million shares or less this week, we got 1 day to go, which is tomorrow. You have to look at the weekly charts to find on the close what the weekly volume is. And if it comes in 280 million shares, which is basically 10% lighter than this week, then you're going to have resistance. And so we're banging against this high. You tried to get through it last week, couldn't do it. Now we're trying to get through it this week. And if volume comes in 280 million shares or less, this is going to be resistance, and you're going to go back to the previous low. Well, previous low is last week's low. If you touch that low on at least equal volume or higher volume, you go down to the next low, and so on. So I think the pullbacks are still in the cards on the weekly time frames, because the dailies are really mushy right now, not giving me a really good signal. But the weeklies are clear, especially if tomorrow we come in 280 million shares or less. We're going to pull back because we just don't have the energy to the upside. And here's the dailies. You got a 3-gap play going to the upside. The market's trying to rally. We're actually touching this high here, which is basically, it's basically this high on the weekly time frames. But this is on the daily. You did touch that high here earlier today, and volume is probably going to come in about equal, so I'm not sure what that means. But again, on the weekly time frames, to get through a previous high, they always have to say, they have to have a sign of strength. Yeah. A sign of strength means you got to have at least equal volume, if not higher, going through the previous high. So if you have 10% less than the previous high, you don't have a sign of strength. You just got a test of previous high. So I think that's what's happening here. I still think we're going to pull back, even though this week's been a non-issue. It's just pretty much a sideways week. I don't know what tomorrow's going to bring. It may try to stay up, it may not, but I'm not seeing the volume studies come in to suggest this rally has any legs. So if it's not going to go up, it's going to go back down. So ultimately, I think we're probably going to end up sometime later this month. We're going to see 510, which is basically this low. I think that's where we're going to go. There's a gap down there. This is a previous low that may be tested, which is April 21st. So we'll see how that works out. I don't have enough confidence to really get a buy signal here, but I don't have enough confidence to go short here either. So I'm just kind of wait until another clear signal develops. So
Yeah.
not doing anything. GDX, on the other hand, is doing stuff.
Yeah.
Maybe I'm going too fast here, but
No. Yeah, and seriously, guys, if anyone has any questions, please put them in the den. There you go. Actually, Tim, regarding just going to look on the SPY. We actually do have a question. If you use ABCs, and do you recognize the 1 to 575? Like the price, like 5,750, I would suppose, is what he's referring to.
575 up there, you mean?
Yeah, that's right. So he's looking at an A to B, C to D, and if you look at that when you're considering in the SPY, yeah.
Well, I do a lot of ABC works, but I do the volume studies in the ABCs, and I look at, 5 counts, Elliott wave type 5 counts and stuff too. But, if you're doing the ABCs, we actually have an ABC down from the top of, I think it was April or March, wherever that top was. And so we only went down in an ABC. That means that's just a correction wave in an uptrend, because impulse waves goes in 5 counts. ABCs go in trend counts. So ABC down means you got another at least 5 count up. So I'm thinking we made this April 7th low at the bottom, but as far as ABC up here, I'm not sure that 575 really means anything. I'll put it that way. Don't know if we'll get there or not. I don't think so. I think we'll stop right around where we are right now.
Understood. Yeah, and folks, if you have any other questions for Tim, you can ask them in the Discord, or you can do so on our YouTube channel. Tim, please stay right there, folks. We'll be right back with Tim Ord after the break. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We're joined right now by Tim Ord of the Ord Oracle. Check out his website, ord-oracle.com. Look at the SPY trading up 1.41% at $569. And then looking at the GDX, which we're about to speak to, off about 2.03%, trading at 48.82. Tim, what are we looking at with the GDX?
Right, it's kind of, we've talked about this before. The GDX is the 3 drives to the top pattern. The second high has to retrace at least 61.8% of retracement of the previous rally up, which it did. It did a little more. You went volume to increase, showing that energy to the downside was increasing, and it did. If you had a big volume chart down here, then you rally up to the final high. Sometimes as high as double top, sometimes they're not. You don't know where it's going to be, but anyhow, 3 drives at top have a downside pattern to where it began, which is around 39. I think everything's kind of working out. It's taking us time to go where it needs to go, but we're up big yesterday. Today we're kind of, I don't have a chart right in front of me right now, but we seem to be pulling back here. This is more divergence. This is GDX in the top window. I did this earlier today, but what's going on right now, if you notice, the market made higher highs right here. And if you notice the bottom window is the cumulative GDX up-down volume. So that's the up-down volume. Next one higher is the cumulative advanced decline for GDX.
Yeah.
These are all for GDX. The volumes for GDX, the advanced decline, since it's an ETF, is for GDX. So it shows there's a weakening advanced decline in GDX, and also there's more down volume than up volume, even though GDX made a higher high. So that's a major divergence. And I don't really try to use this. I use these 2 bottom charts as to define the trend. It doesn't really try to pick out the tops or bottoms, but once you get in a trend, these 2 indicators are really good defining how that trend develops. When the trend reverses, it needs to get from up to down. It needs to get down below -10. And today, if you notice, we're at -6 right there, and this is a little over almost 7. So we need a break below -10. And that's probably what's going to happen here over the next day or two. And that is, even though GDX is pretty much selling close to its highs, these two indicators, if they get down below -10, which like we probably will, suggest that the trend is changing from up to down. So it got back up in January of 2025, and it looked like we're probably going to start going bearish sometime here in the next several days. So this defiant haven't quite got there yet, but if you notice, we broke a new low on both indicators going back to March, because we're lower now than we were in March, even though GDX is higher. So it shows the internal of GDX. Shows the internal is actually weakening here, because it shows a weakening advanced decline, and it shows the up down volume, showing more volume going to the downside than the upside. So even though it's not showing a lot weak price wise yet, it's probably going to come here pretty shortly. But 39 is going to be the big, I think, the next big buy area. Okay. So we'll see how that happens. But GDX, in my opinion, the downtrend has started, even though we really haven't gone much down so far. Trend following indicators are definitely weakening here. So not the time to buy. This is the reason why we got out back in, I forgot what day that was. We were on the radio, so that was what, mid-April? Yeah. We're talking about, I said around 50, maybe 52. It did get out almost to 53. It's hard to pick tops. Bottoms are climatic. Tops are kind of, you think you got it, and it goes a little bit higher. But this is the reason we got out. This is the monthly chart, GDX, going back to 2008. And you can't really see it, but we did get way above the upper Bollinger Band on the monthly time frame. That was one reason why. Another one reason why is the RSI got over 70. Matter of fact, it's still 70 right now. It's almost 71. So that's another reason why we got out. And it's still up there. So support this chart pretty good here. It got support around 39, which is pretty much close to the previous highs. I think that's where we're heading. Bigger trends up. This is just a timeout in an uptrend, so I don't think you have to worry about it, but it's not really the good time to add positions right now, I don't think. But when it gets to 39, which nobody will want to add, will be the time to add. So you buy in fear, you sell in euphoria. And so we're starting to go to the fear stage now. We haven't reached it yet, but we're pretty close getting there. Or the fear stage is when you want to buy, and so far we're not very far. We're quite a ways from it yet. So, but when the fear starts, you'll be hearing about it, how bad it is, and all this other stuff. And we'll show you indicators how to pick out the next low or get close to it. So, anyhow, that's that.
Perfect. And Tim, I know you might not have any charts on it today, but are you seeing anything with silver as well? Are you expecting it to kind of follow the same trajectory, at least like the miners are following here?
I think, I do the actually silver-gold ratio. There's a gold-silver ratio. I do the other way around. The reason why it seems, it just works out. But, silver is just rock bottom. Yeah. The price of silver compared to gold is rock bottom right now. That ratio really doesn't get any lower than it is right now. I don't have that chart in front of me. But if silver is a rock bottom relationship to gold, that would imply silver is probably a really good buy right now. History shows that when silver stocks outperform with gold stocks, that's usually what happens in bull markets. And so far, gold stocks outperform the silver stocks. Right. So either we're way early in this stage of a bull market, and silver stocks are still way ahead of us when they start to outperform. That would put quite a long time limit for this bull market, because silver right now is just rock. The ratio is basically setting at a rock bottom, right? Going back for 15, 20 years. It's just sitting at the very lows. So I have some silver stocks in my portfolio, and they're doing okay, but they're not doing as good as gold stocks. So, but actually, gold stocks, I think, they're going to start motivating here to the upside.
Oh, for sure. Some of the smaller junior miners have also really, picked up in some major ways too.
Yeah, that GORO.
Oh yeah,
that was it's starting to perform. I hear the music already.
Well, Tim, was that the last chart you had for GDX?
No, I want to talk about this one here.
Oh, fantastic. Well, Tim, please, right there, folks. Stay right there. We'll be right back with Tim Ord after the break. Welcome back, everybody. Jacob Shoup, Watch the Tom O'Brien Show. We're joined right now by Tim Ord of the Ord Oracle. Tim, I know we have one last chart to look at. We have some questions in the den. One of them, someone asked, Jacob, please clarify. Tim thinks miners should be bought sooner now. Wait until GLD down to 39-ish. I know you were saying we're waiting for, that movement back down to 39. But then we were talking about Goro kind of waking up, and same with VGZ. Kind of the way I'm thinking about it is, the individual stocks will definitely do what they do, the individual miners, but the whole aggregate is still kind of in this potential downtrend. Is this kind of the idea? And they really wake up individually and as a whole once the GDX kind of can recover from that $39 position.
Is that what you're asking?
There's a way I answered him. If you have anything to add or correct about my kind of answer for him on that.
No, yeah, I mean, some of these stocks are actually probably going to just do fine.
Yeah.
Especially the ones that are in basing right now. They're not going to go down anymore because they've already been basing for the last couple of years, and they may start going up. But I guess the Newmont Minings of the world and AEMs and all of those stuff, they'll probably pull back with GDX, but not necessarily that the ones that are in the basing period are just starting to come off the bottoms. I mean, if they give a clear buy signal, I wouldn't hesitate to buy them. I'll put it that way. But in general, this whole market's due for consolidation. We've been running since January.
Sure.
So, what's that? 4 months up, so a month or two down here, and probably some sort of a bottom in June or July. Yeah, that's what I'm thinking anyhow, is where the next rally will probably start from. So, what you said I think is right. So,
okay.
There's no danger, I guess, of a top of any consequence. I can show that chart. Matter of fact, I'll show the chart next time. The monthlies remain on a buy signal. So this is a consolidation and an uptrend. So you want to buy the pullback. So I don't know. Does that clarify everything? Yeah. All right. Anyhow, this is what I think is developing on the bigger time frames. We've gone over this chart before. I think it's really the whole key here is this RSI. In downtrends it stays below the 50 level, which it did from 2012 until just recently, 2020. It looks like about August 2020. Well, it got above 50. We're at 60 right now. And that's what you want to hit. You want to hit a high number coming off and pushing this RSI way above the previous highs. Well, the previous highs on RSI was basically 50. So you're up around 60 right now. So that's initiation of an uptrend because you had a surge of strength off of a base period. So this is a sign of strength. And so once you get way above 50 where it is now, it's probably going to stay there. So RSI in general should now, going forward, how long is hard to say, but previously we had 12-year cycles. 2000 to 2012 was an up cycle. From 2012 to 2012 to 2024 was a down cycle compared the HUI compared to the NDX. So what that said is an uptrend, when this RSI is above 50, that means HUI is outperforming the NASDAQ. When the RSI is below 50, that means HUI is underperforming the NDX. In my opinion, going forward here, because every dog, but if this has its day, and really the big dogs were the gold stocks. They did horrible over the last 12 years, especially over the last couple of years. And so now they're all starting to wake up. And as long as this RSI going forward stays above 50, that relationship where HUI will outperform MDX will stay in force. So I'm thinking this is a big cycle going up. And will it last 12 years? Well, it could. I don't know. We'll have to wait and see. But the place to be right now, compared to the NASDAQ, or you can actually compare it to the SPY. But NASDAQ's actually outperformed the SPY. That's what happens in bull markets. So this ratio will probably be even more dramatic to the upside if you compare the HUI to the SPY, because SPY in an uptrend compared to the NASDAQ and the SPX, NASDAQ and uptrends outperform the SPY. So anyhow, equity markets are probably going to underperform the gold markets in general. So this is going to be probably a hot issue going forward. So what's that mean? I guess inflation is going to be sticking around for a while. So we'll have to wait and see how that happens. But this is probably the last opportunity you had to get to buy stuff cheap was back in 2000. And I think we got that opportunity again. So a lot of these gold stocks, I think that one GORO is going to be a double figure gold stock at some point.
Right.
It's a long ways from it right now, but it seems to be showing all the signs it's supposed to, that initiation of out of the bottom. I mean, it's got a long ways to go. What's the exact price, how high it will be, I'm not for sure. But I have quite a few other ones too. But anyhow, this is to remember. So if you're in the stock market, this is probably one area you should, take a look at. So we'll see how that turns out as we go forward. If things go wrong, though, I guess you might say, if this RSI goes for some reason down below 40, or really gets way below 50, that would be a concern.
Sure.
And I don't know if that'll happen or not, but if it does, that would imply the gold uptrend compared to the equity market it has ended. And so we'll have to see how that happens, but I don't think that's going to happen for a while. So anyhow, I want to kind of illustrate this because this is really an opportune time to buy pretty much penny stocks that could really perform going forward. So you don't get that opportunity very often. So
fantastic. Well, Tim, thank you so much. Always phenomenal insight. We'll see how the SPY shakes out today with the volume. Again, just this has really been like a fascinating kind of experience the past month.
Yeah, I'm looking at the SPY now in another machine.
Yeah.
And what we're doing, we're testing a previous high of last week.
Yeah.
And then that high, you're testing a high of, it looks like a April 3rd or April 2nd, I don't know. But anyhow, this is where the sign of strength is supposed to show up. Right here, right now, at those highs, and it's not doing it. So this is where volume should really pretty much be double what it is right now compared. So you have to have a sign of strength through the previous highs, and we're not seeing that. So that's the reason why I'm not really bearish, because the volume's about equal to the previous high of last week, but still way low compared to what it was of the previous high of early April. So I'm not sure what that means. Might mean just more mush going sideways here. But this is not a bullish sign because we don't have a sign of strength through that high. So, but it's not real bearish either. So
yeah, I can definitely see some chopping around as well. Well, Tim, it looks like we might be wrapping up here going into the break. I think the music should be playing here pretty soon. But thank you so much for coming on again, and then we'll see you Tuesday. And there's some.
All right, thanks a lot.
Thank you, Tim. Folks, if you stay right there, we'll be right back. We got a short segment to wrap up the show.